Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news while we're all transfixed by the war in the Ukraine, we are ignoring an even bigger threat. But first, in Russia, sanctions are biting almost as quickly as the war in the Ukraine escalates. The Russian central bank has instituted a huge rate increase, taking it from an already high 9.5% to 20%. The Moscow Stock Exchange has suspended trading and the ruble has reached 119 to the US dollar, although it is lower now. But it is a huge net 30% devaluation in just a few days on top of earlier drops. And the Swiss have suspended their usual neutrality in horror of what is happening and have frozen Russian funds in their banking system. This is an extreme measure for them. And Norway is quitting its Russian investments. Fund managers around the globe are too. Meanwhile, the cyber war is intensifying. Toyota, the world's largest car maker, said it has suspended all production in Japan after a possible cyber attack at a major supplier. Hino and Daihatsu have also shut down. The other major battle raging in the world on climate change is now a news afterthought, but it is arguably more serious, certainly in the long run, and that is being lost. The IPCC now says the dangers of climate change are mounting so rapidly that they could overwhelm the ability of both nature and humanity to adapt unless greenhouse gas emissions are quickly reduced. That is according to their major new scientific update released overnight. Elsewhere, the booming US economy is sucking in imports faster than it is exporting, and that has resulted in a record merchandise trade deficit, although their services surplus will mitigate some of that. But in the US manufacturing heartland around Chicago, their expansion is slowing. The growth in new orders is slowing, and almost a quarter of firms there said they had an outright reduction. They also reported that cost pressures eased somewhat. However, things look bright in Texas and their factory sector. New orders rose after a January stumble, and inflationary pressures remain strong there. In India, new data there shows their economy is losing momentum and quite quickly. Of particular concern to them is that both trade and investment are going backwards. Back in Australia, retail sales came in above expectations, posting a surprisingly good 1.8% gain in January from December. The US Treasury 10-year yield opens today at 1.87% and down 10 basis points from this time yesterday as the risk-off mood settles in on markets. And the price of gold starts today at $1,895 an ounce, and up $6 from this time yesterday. And US oil prices are sharply higher today, up $3 at now just under $94.50 a barrel. The international Brent price is just on $97.50 a barrel. But even though it has touched the benchmark in intraday trade, oil still has not really gone over $100 a barrel yet, which is a surprise for either grade. And the Kiwi dollar will open today at 67.7 US cents after a volatile 24 hours, in which was up more than a cent from its lows yesterday, but only a quarter cent from this time yesterday. Against the Australian dollar, we're at 93.3 Australian cents and a marginal slip. Against the euro, we're at 60.3 euro cents and a rise back to its 2022 highs. That means our trade weight index starts today at just on 72.4 and a 5-week high. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.